Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was, a wrap of the biggest stories over the past week. I'm Sean Aylmer. Well, it was a big week of COVID, end-of-year shenanigans, corporate confessions, and plenty more. Let's start with financial markets. It was a week in which the financial year ended, in Australia at least, and the share market finished up 24%. The best performance in 3 decades, worth about $560 billion to investors. While the past 5 sessions have been reasonably tame in comparison, the annual return reflected both a low starting point and a booming local economy. The consumer discretionary stocks, think Domino's Pizza, the big 4 banks, and the tech stocks, think Afterpay, Appen and Xero, were the best performers, while utility companies, think AGL Energy and Origin Energy, were the worst. The miners were mixed. Demand from Chinese steel mills over the year pushed up iron ore prices, and that helped the big 3, BHP, Fortescue and Rio Tinto, outperform. Lithium and rare earths miners such as Lynas and Pilbara Minerals were among the best in the market as manufacturers scrambled for their output. The gold diggers like Newcrest Mining had a poor year on the back of lower prices for the precious metal. Gold during June had its worst month in 4 years. And oil stocks, Woodside, Santos, and the like, should have done better given the rising price of oil. It was 12 months ago that oil prices were negative, and now Brent crude is close to $75 a barrel. But Woodside and Santos haven't done much. Coles and Woolworths were underperformers during the year. Most of their run occurred in the first part of the pandemic, and CSL was the worst of the mega caps in the 2021 financial year. It was a tough week for the Aussie dollar. The outbreak of COVID across the country weighed on the currency, as did the strong greenback. By the end of the week, it was back to levels last seen late 2020. Wall Street had a good week with a run of record closing highs. There was plenty of strong data out of the US this week to support the buying. One notable was Facebook, which joined the $1 trillion club alongside Apple, Microsoft, Amazon and Alphabet, parent of Google. That makes it worth as much as the top 19 stocks on the ASX. The reason for the rise this week was the dismissal of antitrust lawsuits in the US against Facebook. It was a massive week in international news, highlighted by the 100th anniversary of the founding of the Chinese Communist Party. Ideological strongman Xi Jinping, who in his 8 years as president has overseen growth in both nationalism and the economy, said he would fight for Taiwan to be reunified with the mainland, would not tolerate criticism, and warned countries trying to bully 1.4 billion Chinese. Around 130 countries are close to signing off on a deal that makes multinational companies pay an effective tax rate of at least 15%, according to the OECD. The deal, announced this week, will push big technology groups like Facebook and Google to pay their fair share of tax in the jurisdiction in which they earn revenue. This week, the European Union launched digital green certificates which allow people who have proof of COVID vaccination to travel in the region without need for quarantine. The app-based certificates have already been downloaded more than 200 million times. Former President Donald Trump attended his first rally since losing last year's election over the weekend. And guess what? He claimed the 2020 election was stolen and wouldn't rule out running in 2024. And Johnson & Johnson this week said it would pay the state of New York $230 million as part of a settlement in which the drug giant will move out of the opioid business in the US. It was a hell of a week for the local housing market. Data showed home prices rose their most in 17 years during the 2021 financial year. Across the capital cities, prices were 12% higher, led by Sydney property, which rose 15%. Including the regions, prices were up 13.5%. The only slight dampener was that it looks like price growth has peaked, particularly at the top end of the market. Given interest rates will rise from here, albeit not anytime soon, housing affordability has deteriorated and regulators could step in to curb growth, we're all soon going to have to get used to our house prices rising a little, not a lot. The federal government this week launched its Your Super comparison tool. It makes it very easy to compare retirement products. The top 5 products over 6 years were all industry funds, led by Australian Super and Host Plus. Both provided an annual return over 6 years of 8.1%. The worst performers provided returns closer to 5%. While next week is the big one for the dismal scientists of the world, there was one pretty amazing piece of economic news this week. The Australian Bureau of Statistics job vacancy figures show a jump of 23% over the 3 months to May 2021. Vacancies in Australia were 57% higher than in February 2020, before the pandemic. That's crazy, and just confirms what a remarkable recovery we've had in the labour market. The federal government this week released its fifth intergenerational report. It said Australia could be stuck with deficits for the next 40 years unless it boosts skilled migration, workforce participation and productivity. The report attempts to forecast the state of the budget in 40 years' time. 40 years' time. In corporate news, Seven Group now owns 29.5% of Boral Group after enough shareholders accepted Seven's bid of $7.30 a share. The bid made last week was 80 cents higher than the previous offer and a 12% premium to Boral's share price when Seven initially announced its takeover offer. Oil and gas giant Santos will start engineering and design work on its $2.6 billion Dorado project north of Port Hedland, with a final decision on the controversial expansion expected in the middle of next year. Investing in fossil fuel energy in 2021 is not for the faint-hearted. AGL Energy's board approved the split of the company later in the year. The new group, Accel Energy, will house baseload power-producing assets. That's a fancy way of saying coal-fired power stations. And the redevelopment of its sites to low-carbon industrial energy hubs. Accel will retain 15 to 20% stake in AGL Australia, which will house the retail assets. Telstra sold a 49% interest in Telstra Infraco Towers, the ones that carry their mobile service, to a consortium of the Future Fund, Commonwealth Superannuation Corporation and Sun Super. The price was $2.8 billion at the higher end of expectations, and 50% of that money will be returned to Telstra shareholders when the deal is complete. The Victorian Royal Commission into Crown Resorts continued with more shocking stories about what went on at the group's Melbourne casino. From my point of view, the most disturbing to emerge was about a former doctor who spent 96 hours straight at Crown, mostly at baccarat tables, taking naps near poker machines. By Friday, Commissioner Ray Finkelstein was openly questioning Crown's desire to overhaul its practices. There were a bunch of corporates around the place this week with results or profit downgrades. Metcash had a bumper full-year result in large part thanks to sales at its hardware stores Mitre 10 and Home Timber and Hardware. Engineering and construction giant Lendlease issued a profit warning blaming interruptions caused by the coronavirus pandemic that's hurt rents and development activity, particularly in London. Collins Foods, owner of KFC and Taco Bell in Australia, reported bumper sales, $1 billion for KFC in the 12 months to the end of April. But things have come off the boil since then. And retailer Kathmandu downgraded its outlook, blaming COVID lockdowns. Now I get to the point of the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week was COVID. The outbreak of community-transmitted cases in New South Wales is now well beyond 200 people, with fears there'll be many more in the next few days. The state has been in lockdown for a week, and, hopefully, that will start to take effect, and numbers will start to fall early next week. There's been a smattering of cases across the country, from Western Australia to Queensland. Border closures, restrictions and lockdowns affecting 12 million people were put in place during the week. From a vaccination viewpoint, the country is now closing in on 8 million doses. The government this week said AstraZeneca would become available for anyone under the age of 60, reversing a previous recommendation that Pfizer be given to that cohort of people. The latest data shows that AstraZeneca is safe 99.999% of time against a rare blood clotting disorder. The state premiers undoubtedly are frustrated at the pace of the rollout of vaccinations. There was also pressure this week to reduce international arrivals as the country works its way through the current coronavirus wave. Yesterday, following the National Cabinet meeting, the Prime Minister announced a 50% reduction in arrivals, and trials of at-home quarantine for fully vaccinated returning travellers and international students will begin shortly. From an economic point of view, most analysts argue that the current lockdowns won't have a long-lasting economic impact. During previous shutdowns, consumers and businesses have bounced back quickly. From an equity market perspective, some of the COVID stocks have had a much better week. The sleeper story of the week came from Telstra. I'm not much of a tech head, far from it. But the whole 5G thing and what it allows, much faster speed and no latency, driverless cars, the Internet of Things, etc., has captured me. The big problem, as far as I can see, is rolling out the network of connection points and repeater stations. 5G needs millions of them across the country, close to each other, in line of sight. But this week, Telstra said it had set a global record, transferring 5G data between two locations 113 kilometres apart. That is big, big news. Maybe I'll have to reappraise my cynicism. The most remarkable story this week was the one about travelling pooches. Virgin Australia is running an online poll asking whether people think pets should be allowed to travel in the main cabin rather than the cargo hold. Airlines and pilots will be allowed to choose from December this year. Really? Okay, maybe companion dogs, but please, not a free-for-all. The other remarkable story this week was the one from the Maritime Union of Australia. After 3 years, the union has negotiated a deal with Hutchison Ports, which runs facilities in Sydney and Brisbane, that says 70% of new hires must come from friends or family of current employees or union-nominated people. Wharfies earn on average $170,000 a year. This is crazy. I'm surprised it's even legal. My favourite story of the week involved a cabinet reshuffle of National Party ministers. Not surprisingly, Barnaby Joyce supporters took home the prizes. A week after Mr Joyce took over the job of Deputy Prime Minister, supporters Bridget McKenzie and Andrew Gee rejoined the cabinet. The two Nats demoted were Darren Chester and Keith Pitt, who was a big supporter of former leader Michael McCormack. So, why is it my favourite story? Because of one quote from the demoted Mr Chester. He said when told of his sacking, Mr Joyce was incoherent, and I quote, "I couldn't actually explain what he was even saying to me. So, people of Australia, brace yourself. There will be more conversations like that." And that's everything you need to know from the last week. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then. The partnership economy has arrived and it's powered by Impact, a proud supporter of Fear and Greed. Performance-based partnerships are relationships built on trust, peer referrals and recommendations, and they're boosting revenue growth across the world. Strategic brand partners, mobile apps, influencers, affiliates, content creators and more can all drive sales for you. Impact's Partnership Cloud is an integrated solution to help you acquire new customers and grow revenue through the partnership channel. Find out how companies like Uber, Nike, Canva, Woolworths and eBay use Impact to power their partnership success. Visit impact.com/growth to find out more.